Let's say you're someone who has many goals that require a significant amount of money. You want to travel abroad every year, upgrade your car, buy a house, help your family financially, and enjoy annual trips during the holidays. But at the same time, you're working on those non negotiable goals that will bring you financial security, like funding your emergency fund and contributing to retirement. With so many important aspirations, you might be wondering how to decide which financial goals to prioritize. How do you manage your money so that you can enjoy life now while also securing your financial future? If this sounds like you are in the right place. In today's video, we will explore effective strategies to prioritize your financial goals, ensuring that you strike a balance between fulfilling your dreams and maintaining financial stability. To make this content practical and applicable for anyone, I have broken down the strategy into 3 steps. Ready to get started? Let's dive in. There's no way you can plan for the future without knowing where you stand in the present. That being said, it's time for a reality check. This step involves taking a comprehensive look at your financial details to understand your cash flow, because you're going to try to answer the following question: how much of my income is going toward expenses and debts, and how much is going toward savings? Essentially, you're looking to balance the needs of 2 people, you in the present and you in the future. If you have never assessed your finances this way, here's how you can approach it. Start by gathering all your financial statements, bank account, credit card, loan, and so forth. Review these documents to get a clear picture of your monthly income and how you distribute your funds. This includes fixed expenses like rent or mortgage payments, as well as variable costs such as dining out, entertainment, and discretionary spending. Then categorize your expenses to help identify areas of potential overspending or services you no longer need. This process will help you trim unnecessary expenses and free up more funds for your future self. I find it incredibly helpful to set boundaries based on this dual person perspective. For example, I use a rule that 70% of my income goes to me in the present, covering day-to-day expenses and enjoying life now. The other 30% is reserved for me in the future, whether that is saving for buying a new car, traveling, or securing a deposit on a home. By setting these boundaries, I can clearly see how much money I have available to allocate among various goals, ensuring that both versions of me are well taken care of. If you would like more guidance on how to set these boundaries and organize your finances in a way that respects both your present and future needs, check out my video linked below where I walk you through the steps in detail. Now that you know how much money you have available to allocate to your goals, the next step is to define each one clearly. For example, one of my aspirations is to travel to Spain. However, simply stating that I want to travel to Spain is just a wish. It's too vague and broad. To transform this wish into a goal, I need to add more details to make it more actionable. And to do just that, we will use the SMART method, a very popular system for setting goals, but adapting it for financial planning. Here's how it goes. First, ensure your goal is specific. You need to define exactly what you want to achieve. Using the example in my case, I want to travel to Spain. Next, you need a way to measure your progress. Speaking of financial goals, this will most likely be the dollar amount needed. So I will do my homework to figure out the total cost, and it will help me track how close I am to reach my target as I save. Then confirm that your goal is realistic given your current resources and circumstances. based on the cost I have come up with, can I afford it? Is this achievable, or am I being a bit unrealistic? It's also wise to double check if this goal is important to you. Remember, there is a opportunity cost associated with every choice. If I dedicate time and money to do this trip, that means I won't have those resources available for other potential needs or wants. Finally, set a time frame for reaching your target by deciding whether it is a short-term or long-term project. Once you have all the criteria defined, you can transform your wish into a plan, and it would sound something like this. I need $3,000 by October to travel to Spain and visit my family. And to do this, I will save $600 monthly. Simple, right? Now you can apply this technique to set all your goals. Now that you have defined each goal using the SMART method, it's time to tackle one of the most challenging aspects of financial planning: choosing your priorities. Unfortunately, not all goals are created equal, and not all can be pursued at once, especially when resources are limited. Often we fall into the trap of putting the cart before the horse, especially when we don't have the financial means to save for everything at the same time. For example, let's say that in addition to my trip to Spain, I also need to finish funding my emergency fund. I want to help my mom financially, and I really want to buy a pair of Gucci shoes. Without the funds to allocate money to all these goals at the same time, what should I do? Should I stop building my emergency, send that money to my mom, buy the Gucci shoes on credit, and make installment payments while trying to save $600 for my trip? That would be poor planning. So let's take a step back. Knowing that managing a vibrant set of goals alongside essential financial obligations can be challenging, I want to introduce you to another tool to help select which goals to focus on first. This tool will make your planning very easy. Essentially, goals fall into the following categories. Non-negotiables. These are the mandatory goals that contribute to long-term financial stability, such as contributions toward retirement and saving for unexpected expenses. Then you have the high-value goals. These are goals that have both emotional and practical implications. What this means is that each of us has different beliefs or principles that determine what is important in our lives. For example, values such as security, family, independence, generosity, and enjoyment might guide our decisions. Of course, you need to know yourself a bit to understand what your values are. Let's say that generosity is part of my set of core values. Then giving or supporting my family financially will be a goal that falls into this category. Then we got discretionary goals, and these are more flexible and include plans that are neither mandatory nor of high value. This categorization should guide you on which goals to focus on first. Out of all three, the non-negotiable goals, as the name implies, are not open for discussion. The 30% that you allocate for you in the future should partially cover this, and hopefully we might be able to work on more than one goal at a time, so the ones that fall in the next categories will follow suit. But if you are a visual person, a prioritization matrix can help you make those tough decisions about which to tackle first. This tool is essentially a ranking method where you can score each goal based on 4 different factors. Factor number 1 is value alignment. So again, how well does your goal align with your core values? Then we have importance. What is the overall impact of this goal on your life or financial stability? Then we have urgency. How time sensitive is this goal? And lastly, we got personal desire. How much do you personally want to achieve this goal. Here's how it works. On a spreadsheet or a piece of paper, you're going to list all your goals and score each one against each factor using a simple 1 to 5 scale, where 1 indicates very low alignment, importance, urgency, or desire, and 5 will indicate very high. Then sum up the scores for each goal. The highest score will indicate the highest priority. Sometimes seeing it laid out systematically will confirm your intuition. And with that, you can adjust your monthly contribution to each bucket, and as the progress is achieved, you move on to the next goal and so forth. Financial planning is very dynamic, so take what you learned and adapt it to your lifestyle. Also know that it's okay to change your plans as life happens. Now that we have talked about setting and prioritizing financial goals, I would love to hear about yours. If you found this video helpful, make sure to subscribe. Thanks for watching and catch you next time. Bye.